I've got clients who bought 5,000 Bitcoins back in 2010, 2011, because they thought, this is how money should work. And then Bitcoin did what Bitcoin does, and it just went bananas on them. And all of a sudden they woke up worth hundreds of millions of dollars. These jurisdictions are favorable for a number of different reasons. One, they have the types of trust provisions that can last for many, many years. Nevada, a trust can last for 365 years. Wyoming, a trust can last for 1,000 years. South Dakota, it can literally last forever. A lot of our Bitcoiners didn't come into this from a position of wealth. They just kind of found themselves just ridiculously wealthy one day. They say, you know what, I was put on this earth to do something, whether it's being a doctor, whether it's being a lawyer, whether it's being an auto mechanic, whatever it is, they just feel called on to do that. I was stunned that there was anybody who had 150 million bucks worth of Bitcoin back in 2017. But since that time, I've met people who have a hell of a lot more than that.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Welcome back to the Bitcoin Frontier podcast. This week I have on Matt McClintock. Matt, welcome.
Thank you, Joe. Thanks for having me.
Yeah, glad to have you. This is going to be an awesome conversation. For the audience that may not know who you are, can you kind of explain your background and how you got into Bitcoin?
Yeah. So my background is as a trust and estates attorney. I've done that for almost 25 years now. My focus has been on complex planning for ultra high net worth clients. So people in the 50 million plus to hundreds of millions of dollars worth of wealth. That's kind of been my space. In 2017, I got introduced to an individual who at that time had about $150 million worth of Bitcoin. And as you might imagine, nobody that they found knew anything about Bitcoin. I know wealth planners, no estate planners. They couldn't find anybody to have a serious conversation about this stuff. And I didn't know anything about it either. I was completely, naive as to what Bitcoin is or was or whatever. But I've got kind of this relentless curiosity. And I had this conversation with my business partner, and I said, this is obviously worth something. I mean, there's value here. It's publicly traded. You can find spot price on this. If we can simply, first of all, if this person is not a criminal, and secondly, if we can figure out how to substantiate the transfer of ownership from an individual to some type of tax optimized structure like we've done with other assets, if we can figure that out, then everything we've ever done for conventional assets is on the table for Bitcoin. And so that's what really got me learning about Bitcoin. And kind of one thing led to the next. And by the end of 2017, by first quarter of 2018, we had done a tremendous amount of complex wealth structuring for this family that had a whole bunch of Bitcoin. They asked if they could pay us in Bitcoin. So I figured, the answer has to be yes. So I just don't know how, but we'll figure that out. And then as we went along, we had that client also likes to buy real estate, and they have other financial activities. And they said, well, can you guys do other stuff for us besides just our estate planning? And my default answer is typically yes, unless there's some compelling reason for it to not be yes. And kind of before long, we kind of accidentally became a fractional family office for this Bitcoiner. And then, one client engagement leads to the next, and I'm down the Bitcoin rabbit hole, just really trying to learn as much as I can about it and falling in love with the tech, falling in love with the ideology, and buying as much as I can, and just meeting really interesting people in the space. And both my business partner and I have a background in education. And so we started teaching other attorneys and other financial professionals what Bitcoin is and how you do structured planning for it. And before long, we start getting other clients that are kind of similarly situated, 8 and 9 figures worth of Bitcoin. And so we kind of accidentally became the estate planning and wealth management firm for these ultra affluent Bitcoiners, and haven't looked back. So we've been going at it strong for now almost 7 years in the Bitcoin space with a heavy level of focus. And now it's the totality of what we do.
Yeah. I mean, that's a pretty awesome story. I'm sure you work with a lot of interesting clients and people. Like, who is your typical client? Is it the very early Bitcoiner that, bought some or mined some before, ASICs were a thing? Or is it like high net worth people that decided to allocate a significant portion of their existing portfolio to Bitcoin? Which of the two?
It's really the former. It's the people who stumbled into Bitcoin across some, chat room, back when those were a thing, back in 2010, 2011, and said, hey, this is really interesting. Might as well just get some. And some of them were miners. Some of them were mining on laptops. These clients I've got clients who bought 5,000 Bitcoins back in 2010, 2011, because they thought, this is how money should work. And then Bitcoin did what Bitcoin does, and it just went bananas on them. And all of a sudden they woke up worth hundreds of millions of dollars. And that's where I think our sweet spot is, because, we're not a conventional wealth management firm. We're not a conventional family office. We have no products to sell. We sell ourselves. We sell ourselves as advisors, as strategists, as planners. And the clients that we are fortunate enough to meet are these people who have 2,000, 5,000, 10,000 Bitcoins or more. And they got into it because it was just interesting. And now, because they're worth hundreds of millions of dollars, they realize, well, the key security protocols I had back when it was only, a few $100,000, that's different now. And I've got tax consequences. If I want to liquidate this stuff, how can I proactively plan around that? This is meaningful wealth for my family. How do we maximize the use of that wealth in ways that are strategic? How do we help the next generation start to appreciate what this wealth means? Because these clients, without exception, these clients did not come from tremendous amounts of wealth. They built this significant wealth inside the last, 15, 16 years or so. And it's transformed everything about their family. And so we're not like the typical wealth management firms that call themselves family offices that say, hey, sell all your Bitcoin and then buy this, crappy investment vehicle that we're going to put some lipstick on and tell you it's the best thing in the world. And no, it's like, you made a ton of money in Bitcoin. You tell us what you want to do. We will help you then express your investment philosophy through your worldview. And that is publicly held equities in really intelligent companies that are operating around the world. We believe in liquidity. We believe in title held assets to the client. We believe in bankruptcy remote investments, which means assets don't get held with a non-qualified custodian. And we believe that, we kind of have this mantra, I guess. We believe that how you own your assets and where those assets are owned is actually more important than what the assets actually are. Whether it's Bitcoin, whether it's early NVIDIA stock or whatever, how you own your assets ultimately will determine how effectively you enjoy your wealth during your lifetime, pass that wealth on to the people that you care about, whether it's your spouse or your partner or your kids. And then what jurisdictions do we need to pull in? If you live in Colorado like I do, or if you live in New York or California or someplace like that, you probably want to take advantage of more private jurisdictions. You probably want to have more asset protection around your wealth. You probably want to have a more robust family governance structure to help the people that you care about become the fullest versions of themselves. So we focus on how to own, where to own. Then we start talking about what to own, whether it's Bitcoin, whether again it's any other, whether it's Swiss francs or physical gold. If you want to have analog Bitcoin, you can hold analog Bitcoin in a Swiss vault somewhere. And then the purpose. What is it all about? Because what is so rewarding for me that I see in the Bitcoiners specifically is they have this greater sense of purpose. There's the wealth means something. There's a sense of stewardship. There's this whole low time preference ethos, which is right on. And they say, it's not just about giving my kids absolutely everything and having a bunch of spoiled brats. Maybe it's about making the world a better place through the expression of my faith, through the expression of my values and how I invest, through philanthropy. If I can help other people somehow along the way, that's really how we work. So it's all about how you own stuff, where you own it, what you own, and then why.
Yeah, that's awesome. When it comes to these like individuals or these clients, Is there like one specific question or problem that they most often approach you with?
Yeah. Well, yeah. And I'm gonna go a step further too. The biggest question that they approach me with is, what happens to this stuff if I die or if I become incapacitated? Because even in families that are pretty open communicators, very often one person is the Bitcoiner and the other person may have some familiarity with it, but they're not as deep down the rabbit hole on the technicals. And so if you're, if you're the Bitcoin maxi of the family and you've orange pilled your spouse or your partner, and they get it, but they get it conceptually, they don't understand it mechanically. A lot of what people are asking us about is how do we then ensure that ultimately when I slip off this mortal coil, how does my partner, how does my spouse, how do my kids get access to this? So very often it's about the mechanics of transferring the private key material. That's usually what people are concerned about. The next step beyond that, once we have some conversation, is kind of back to this whole why and how side of the conversation. It's like, okay, well, let's assume that we can solve the mechanical transfer of key material, whether it's in a multi-sig, whether it's in a single sig, whether you've got your private keys, on paper sharded out. But let's assume that we solve that mechanical problem. Do you want your 20-year-old kid to have access to, $100 million worth of Bitcoin with no strings attached? Maybe the answer is yes. The answer probably ought to be no, because you have no idea what's going on. And it could be, it may be your 50-year-old kids, maybe they're not ready for it either, because so much of what we concentrate on when we talk about how to own, we talk about helping the people we care about become the fullest versions of themselves. If we just dump any asset, whether it's Bitcoin, whether it's cash, whether it's brokerage, whether it's real estate, whatever, if we die and we just dump our stuff in the laps of the people we left behind, what happens next year when the beneficiary goes through a divorce? What happens when the beneficiary has to declare bankruptcy because their business failed? What happens if the beneficiary gets drunk or stoned and they run over a pedestrian in the middle of the night somewhere? Well, they're going to get sued. And the assets that they have ultimate control over will now be subject to the claims of those creditors, whether it's a soon-to-be ex-spouse, soon-to-be ex-business partner, or just some random dude who staggered out in front of them at 2:00 in the morning in the middle of the road. So how you structure your wealth, especially for the people that you leave behind, can go a very long way to making sure that the wealth you build during your lifetime is preserved and enjoyed for the benefit of the people you care about, without just losing the protection. So that's, once we kind of get into a deeper conversation beyond just the mechanics, we start to focus on we get beyond the mechanics of the wealth transfer, and then we start to apply the transfer of values that built this wealth in the first place.
Yeah, it's very interesting. How does that compare, I guess, to traditional assets, where it's like if you have, $100 million worth of NVIDIA stock versus Bitcoin? Obviously, like you said, the mechanics of the key transfer is very different with Bitcoin. But like, are there any other differences when it comes to traditional wealth traditional assets that people hold a lot of wealth in?
Yeah, I mean, there are a few differences, I think. One goes to the fact that Bitcoin is what's called a bearer asset, which means, there's not a title to it. Your NVIDIA stock is probably not bearer certificates. It's probably in your Schwab account or someplace like that. Bitcoin, with the control of the private key material, you can move it anywhere in the world, which is part of the beauty and magic of Bitcoin. However, it's also part of the fragility of Bitcoin as a mode of family wealth. And I'm 100% bullish on Bitcoin for family wealth. It just makes it more complicated when it comes to securing it and then managing it. It is, and this will kind of maybe get into another part of the conversation, but it is kind of very analogous to leaving like physical gold in a vault somewhere for the people that you care about. You can give your spouse or your partner or your kids access to the combination to that vault. You can, if you want to, you can shard that combination to the vault. You can leave it in multiple safe deposit boxes with friends that you trust around the globe. But ultimately, somebody's going to have the combination, go get access to that, and then do whatever the hell they want to with the gold inside that vault. From a planning perspective, and this kind of gets to the biggest point of friction when we're planning for people with Bitcoin, and that is this notion, this great value, which I adhere to, which is not your keys, not your coins. and there's great tension in this, because if you have $50,000 worth of Bitcoin, or you have $50,000 worth of physical gold in a vault somewhere, it's probably fine if you simply say, okay, here's the combination. My wife or my kids or whomever, once something happens to me, you can go get the gold out of the vault and you sell it, you use it, you do whatever you want to with it. $50,000, that's fine. $50 million, that's a problem, because it's a problem from a lot of different perspectives. First of all, we're just talking about the sheer magnitude of the wealth sitting in one spot without any safeguards as far as how the asset is accessed. The other side of it too is, if it's $50 million and I am a U.S. person, I'm a U.S. citizen, wherever I live in the world, if I'm a U.S. citizen, or if I'm a non-citizen, but a U.S. person from a tax perspective, maybe I've got a green card, or maybe I've acquired U.S. property or whatever. If I'm a U.S. person, then I'm subject to worldwide tax on my income and on my assets as a U.S. person. So if I've got $50 million worth of Bitcoin sitting around, or gold, or whatever it is, every dollar in value above my estate tax exemption is going to be subject to tax at 40%. So right now, for people who die this year, you've got a $13.61 million federal estate tax exemption. If you happen to be unfortunate enough to live in New York or Massachusetts or Maryland or someplace like that, you will also have, or Washington, you'll also have a state level estate tax, which usually kicks in at a much lower level, like $1 or $2 million. So you might have state level estate tax, you'll have federal estate tax, which combined could cause erosion of about 55 to 60% of the total wealth above that estate tax exemption amount. But if I proactively, strategically structure my estate plan, I can shift the value of that out during my lifetime by proactively using my gift and estate tax exemption. And then all that future growth, if Bitcoin goes from 60,000 back to 69,000 to 690,000 or wherever it ends up going, all of that growth will avoid estate tax when I die. And if I've structured it properly through long-term trusts, it can escape tax at every following generation for many, many, many generations, depending on what jurisdictions we plan through. So we've got all kinds of opportunities when we're dealing with wealth structuring and estate planning for Bitcoin and for assets that perform like Bitcoin. But kind of back to this issue of how is Bitcoin unique in this? Because you could make the same argument whether it's $50 million worth of Bitcoin or $50 million worth of NVIDIA stock or private equity or whatever. But here's where the Bitcoin reality crashes headlong into the tax reality. If we still hold our private key material, then it is just like watching the $50,000 worth of gold in our vault grow in value to $50 million worth of gold in our vault. And if I have not moved the gold from that vault that I control into a vault that is owned by a specific type of trust, where the trustee actually controls the vault, I have not moved it out of my estate. And so all that value is now subject to 40 to call it 50 or more % tax erosion above my estate tax exemption amount. And this is where Bitcoiners, and I struggle with this too. This is where Bitcoiners have some of the biggest challenges. Wait a second, Andreas and my friends at Unchained, all my friends on Twitter say, hey, not your keys, not your coins. Okay, being your own bank is super fun, but once you have tens of millions of dollars in this asset, it doesn't work anymore. Because if you want to get the value out of your estate from a tax perspective, you gotta be willing to release control of the key material. Now, fortunately, there are qualified custodians who are not just insured, but regulated by bank regulators, both here in the United States and overseas, who can secure Bitcoin. But again, it's you have to give up that control, because if you don't give up the control, that's a choice that you make. And if you don't give up that control, you don't get the value out of your estate.
Can you kind of explain more details around like these long-term trusts? Like how long-term are these trusts, and like which states are the best way to set up something like this?
Yeah, great question. There's a handful of states that are really particularly attractive, and there are also some non-U.S. jurisdictions that will do these structures into. Here in the U.S., we like places like Nevada, Wyoming, South Dakota, Tennessee, maybe Ohio, New Hampshire. And the reason, there are certain states that have characteristics that are highly protective and highly private. And kind of in broad strokes, we're talking, if you're going to get the value out of your estate, you're going to create a trust that is irrevocable once you create it. Once you create the trust, you individually cannot unilaterally change the terms of the trust. That's part of letting go of the control. You say, well, once I create this trust, I take my hands off of it. I can't be my own trustee. And I have to select a third-party trustee. And then whether it's my NVIDIA stock, whether it's my gold, whether it's my Bitcoin, I have to transfer that asset into the custody that the trustee can control, because that's what will sever what the IRS calls dominion and control. So it's an irrevocable trust that will set up in a favorable jurisdiction. These jurisdictions are favorable for a number of different reasons. One, they have the types of trust provisions that can last for many, many years. Nevada, a trust can last for 365 years. Wyoming, a trust can last for 1,000 years. South Dakota, it can literally last forever. Cook Islands is another jurisdiction we like a lot. It can literally last forever.
In this frontier moment, Matt is talking about how some trusts last 365 years, 1,000 years, or even forever. But what is the origin history of trust? Where do they even begin? Well, trusts as a legal instrument date back to the time of the Crusades, when knights departing to the Middle East transferred ownership of their lands to a trusted individual. This arrangement was meant to manage the estate and provide for the knight's family should he not return. The trust concept has, of course, evolved significantly over centuries, adapting to complex family and financial circumstances. And Bitcoin, a highly valuable digital bearer asset, is likely going to impact the future of trust too. And now back to Matt.
So we look for jurisdictions that have a lot of, they've abolished this particular old-fashioned law that said trusts have to terminate within a pretty short period of time. That law is called the Rule Against Perpetual Trusts. It's an old-fashioned law from the 1600s or something like that. And the more progressive trust jurisdictions, the more protective trust jurisdictions have abolished that or modified it. These trust jurisdictions that we like also allow you to create what's called a directed trust, which means that, in a conventional trust model, I might hire you, Joe, as my trustee, and you as trustee. In a conventional model, you as trustee hold all the power. You have not only do you control the assets, you make all the investment decisions, and you make the decisions on trust distributions to beneficiaries as defined by the trust that I created. So I get to set all the rules, and you have to execute everything. In a directed trust, you fragment that trustee's role. So I might say, Joe, you can be the trustee, but it's a directed trust, which means then I, as the creator of that trust, I get to make all the investment decisions. We don't sell the Bitcoin until I say sell the Bitcoin. I still have to transfer it to you because that's how it gets out of my estate. But I say, Joe, you have to sit long Bitcoin, and I'll sell when Michael sells. And when Michael Saylor decides it's time to sell, maybe I'll sell. And so that's fine. I have to pay you your trustee fee to sit on this, but I get to make all the trust investment decisions. Then I might say, Joe, you're a great guy, and you're sitting, let's say that you're not sitting in Georgia. Let's say that you're sitting in Sioux Falls, South Dakota. And I say, I really want to use South Dakota law for this trust, but I've got a dear friend of mine who understands me. They understand my values. They know my family. I want them to make any decisions regarding distributions from the trust. So then at the end of the day, all you are is holding the jurisdiction for us and doing this kind of ministerial book and record keeping as the trustee of the trust. But I, as the investment trust advisor, get to make all the investment decisions. And my friend, as the distribution trust advisor, gets to make all the distribution decisions. So it allows a tremendous amount of flexibility and what I like to call kind of lowercase c control without it being like capital C control. It allows me to make sure that we sit long Bitcoin, or I get to make all the investment decisions. And I might say, Joe, I want to sell $1 million worth of Bitcoin in the trust. And then you would sell that. We go to dollars. And I say, now, Joe, I want you to take that $1 million and I want you to go start this other company that I'm going to run. Or I want you to go buy this lake house that my family is going to enjoy, or whatever. So it's not just a matter of using these trusts to then reallocate into other conventional investment decisions. This becomes a vehicle for long-term family wealth that I get to determine the investment characteristics of, but you as a trustee maintain this protective framework in a desirable jurisdiction.
Yeah, that's fascinating. What actually would happen after the 365 years or the 1,000 years are then the assets taxed? And like, if there are distributions before that point, are those distributions taxed as well? Like, how does that all work?
Yeah, so a couple of issues here. I mean, the one level of tax I want to focus on is what's called the estate and generation skipping transfer tax. The generation skipping transfer tax is basically just another layer of estate tax that gets assessed when a trust passes from one generation to the next. However, these trusts can be designed to be exempt from that generation skipping transfer tax. So, for example, I've got a trust like this that I set up in Wyoming, and I created this trust for the benefit of my children. And it's because it's a Wyoming trust, it can last for 1,000 years. The way that trust is designed, when I transferred my Bitcoin to this trust, I filed a gift tax return to the IRS. There was no tax due. I was just saying, I'm going to proactively use part of my estate tax exemption, and I'm going to allocate my generation skipping transfer tax exemption to that as well. So I had no tax liability. It simply says now I had one level of exemption available. Now I've just used up some of it. So now, so long as the assets remain in that trust, then when I die, then when my children die, and that passes to my grandchildren, there is no estate tax and there is no generation skipping tax. Then when it goes from my grandchildren to great-grandchildren, great-great-grandchildren, and so on, all the ensuing generations for 1,000 years can avoid this 40% estate and generation transfer tax exemption, so long as the assets remain inside the trust. And again, it depends on how the trust is designed, but they can be designed this way. Then the other issue is, what's the income tax treatment on these trusts? Well, during my lifetime, I, as the grantor or the creator of this trust, in this particular trust, the income tax consequences of any decision are borne by me. So if we make a decision to sell the Bitcoin, I'm going to have federal and state capital gains tax liability on the difference between what my basis was when I acquired the value when I acquired it, which is my basis, to the value at the time of sale, which is going to be the capital gain or capital loss, depending on what the income tax treatment is.
This episode is sponsored by Sound Advisory, an Unchained affiliate. If you can't talk about your Bitcoin wealth with your financial advisor, it might be time to find a new advisor. Sound Advisory is a leading financial advisory firm for long-term Bitcoin holders like yourself. If you need help optimizing taxes, establishing goals, creating a distribution plan for Bitcoin wealth, or designing estate and inheritance plans, then check out Sound Advisory at thesoundadvisory.com for more information. That's thesoundadvisory.com. Now back to the show.
Because it's a grantor trust to me during my lifetime, I am responsible for the income tax liability inside that trust, which is actually a really good thing, because if the trust was liable for the income tax liability, then every time there was a sale, the value of the trust gets eroded from a tax perspective. And so now there's less wealth inside the trust to avoid the 40% estate tax later on down the road. So we want the value in this trust to continue to grow and grow and grow. And because it's a grantor trust to me, I carry the personal tax responsibility. So that way, when I pay my tax liability at the end of the year for whatever happened inside this trust, it has the effect of being an additional gift to the trust, because the trust is not eroded by my gift, but it's actually not a gift because it's my liability. Then I die. Now the trust will become what's called a complex trust, and the trustee either has to pay the income tax liability at the trust level on gains or losses, or distribute that out to the beneficiaries at that point, and then it can be taxed at the beneficiaries' levels. So there's, it's a complicated kind of technical answer, but there's just different types of tax that you have to kind of consider in structuring these things.
Yeah, it's very interesting. I guess without revealing like any like specific client details or anything like that, can you like explain or like is your typical client, sitting on 50 million or $100 million worth of Bitcoin? Like, are they selling Bitcoin at all? Like, or are they still accumulating Bitcoin at all from like maybe another business that they own or operate? Like, do these people work anymore? Do they own a business, or how does it, what's the typical client?
Yeah, I mean, they're kind of all over the map. Some of them have gone to like passive investor role, and now they're starting to kind of hedge out of Bitcoin a little bit, because the clients that we see are, I mean, no exaggeration, are probably like 95% plus their wealth is in Bitcoin. And it's been that way. And so they say, you know what, it's probably makes sense for me to start rotating out a little bit, take some profits, and go into other things. I mean, like they're doing some startups. Some of them are really focusing a lot on philanthropy, and so they're doing a lot of charitable giving, sometimes directly with Bitcoin. Sometimes, depending on what their tax situation is, sometimes they will liquidate the Bitcoin, generate a capital gains tax event at the personal level because they've got some type of deduction to offset it. Or they will create what's called there's a special type of donor advised fund that we can manage at Bespoke. It's called an advisor managed donor advised fund, where if a Bitcoiner wants to give Bitcoin to charity, but they don't really know exactly where they want to do it yet, but they need a deduction this year, we can create a donor advised fund in partnership with a public charity that we've got a partnership with. And we can create a donor advised fund that is advisor managed by my family office company. And the client can donate the Bitcoin and get a deduction for the value of the Bitcoin. But every other donor advised fund I'm aware of right now says, okay, well, now you have to liquidate that Bitcoin and then go into some type of fairly pedestrian investment portfolio. Well, not ours. Ours, we're able to sit long Bitcoin until the client decides to sell. And because we're an RIA, we're subject to the custody rule. And so we have to use qualified custodians, which again could be either in the United States or abroad. But now we've got the donor advised fund that is sitting long Bitcoin. And then when the client wants to make a grant to their church, their synagogue, to some other organization out there that's a charitable organization, the client then directs that grant. They direct us to sell the Bitcoin from that qualified custodian to then generate the fiat, to then distribute the fiat to the charity. Or if the charity itself is able to receive Bitcoin natively, then we can just send it on chain from our qualified custodian to the receiving charitable organization. So we do a fair bit of that. We have some clients who work because they just have a fire in their belly to work. I mean, some of them, again, because a lot of our Bitcoiners didn't come into this from a position of wealth. They just kind of found themselves just ridiculously wealthy one day. They say, you know what, I was put on this earth to do something. And whether it's being a doctor, whether it's being a lawyer, whether it's being an auto mechanic, whatever it is, they just feel called on to do that. And so, they say, I don't do it for the money. I do it because it's my purpose in life. And we say, that's great. We still have this economic solution we need to solve for. But yeah, they're kind of all over the map. And they are also using this level of Bitcoin wealth to say, look, I got into Bitcoin because I believe in its characteristics as hard money. But now the volatility, even though the volatility seems to be smoothing a little bit, the volatility is just like, I'm not sure I've got the stomach for this anymore. I've been riding this thing for 15 years. So why don't we hedge out into other stuff? But I want the investments to also be an expression of who I am as a person. And so whether that is aligned with their view of the world, their view of religion, their view of society, their desire to kind of change the world in impactful ways. Sometimes these clients are selling Bitcoin and starting companies. Sometimes these clients are selling Bitcoin and starting operating charitable foundations to help other people. And sometimes they're saying, well, you know what, I really believe in promoting women in the workforce. And this is a specific case we've got right now. I want to invest in those companies that have screened for, are there women running the company? Are there women in the C-suite? How are those companies doing? And so kind of creating filters to say, look, I'm not actually interested in beta or alpha on my investments. I'm going to kind of ideologically place my bets to support those companies that are expressing a worldview that's consistent with my worldview. And so we uncover that as part of this why journey with our clients. Say, well, what's the wealth all about? And then how do you express that through your investments or through your philanthropy.
I'm curious to hear your thoughts kind of more on that topic. Like, do you think that's a trend that will continue as like global wealth continues to grow and maybe people are beginning to invest not for like maximizing alpha or maximizing returns, but maybe they're trying to maximize some other good or, intuitive moral thing that they want to maximize?
Yeah, I think so. I mean, I'm really kind of encouraged by it. I think there are several factors at play that I think may be driving this, but part of it is generational. Our clients are almost all younger than I am now. I'm 52 in a couple of months. Most of our clients are younger than me, and they have tremendous wealth. And they say, I don't need any more wealth. I didn't buy Bitcoin to make money. It just kind of happened that way. And, I don't want our family wealth to actually be an impediment to our kids. And I want to make the world a better place. And now I have the wherewithal to do that, but I just don't know exactly how to express that yet. So I think for our clients, that's part of it. And a lot of what we do is kind of uncover their vision for the wealth. I mean, I don't really care what the vision is. I care that they care. And then we help them express that strategically. So I think part of it is generational. So I think my generation, Gen X, and then the millennial generation, and then younger, we are just more ideological than the baby boomer generation has been, and we're fortunate enough that that's where our clients are. So that's what we see. I also think that we're kind of in the middle of this significant social upheaval, I think, in the United States right now. I kind of adhere to the view of the fourth turning. If you're familiar with this book, it's a book written back in 1997 by William Strauss and Neil Howe. And the idea is that every 80 to 100 years, American society goes through this cycle, this rotation. They call it a secula. And the idea is that as a certain combination of generations, like this generational cocktail of 4 generations kind of overlapping with each other, it creates kind of the tone of an age. And we start with a high, and we start with like this period of complacency, then we turn into a period of an unraveling and kind of the society kind of starting to pull apart and become more tribal. Then we enter into a crisis phase. And that crisis phase is really where society gets kind of reimagined. And they wrote this book again back in 1997. So this is before September 11th. This is before the great financial crisis. And they were kind of forecasting that America would enter this fourth turning or enter this crisis period around the turn of the millennium. And so, of course, we had September 11th. Then a few years later, we had the great financial crisis. And back in July of 2023, Neil Howe, who was one of the original authors, wrote a sequel called The Fourth Turning is Here. And he basically is making the case saying, look, everything that we said back in 1997 has kind of happened. We are now in this fourth turning. And the way Neil Howe lays this case out is that we're probably in the late crisis period where there will be some type of reimagining of American society for better or for worse. And it probably will be both. It'll probably be for better and for worse. I think we see that in our tribal politics right now. I think we see that in how affluent clients seek to express their wealth and seek to express their values through their investments. I think just kind of where we are as a society. And on the one hand, it's pretty daunting and there's a lot of uncertainty, but on the other hand, there's a tremendous amount of opportunity. So I think there's a lot of factors that are driving people to express their worldview through their wealth, whether it's through philanthropy or investments and or how they structure it for their families.
If we are in that fourth turning phase of like America and I guess the world overall, where do you maybe see the US and Bitcoin over the next 10 to 20 years? Like what might change in your mind?
Yeah, it's kind of anybody's guess. There are times I get really optimistic and there are times I get kind of pessimistic about it, and I think Bitcoin is this really interesting escape pod for a lot of people. You have a non-dollarized asset that you can actually have sovereign control over, that you can move around the world without anybody even really realizing that you're moving around the world. I mean, it's like capital controls don't even really exist anymore in a Bitcoin world. So I think to a certain degree, there's like the escapist sovereignty maximalist argument, which again, I'm kind of ideologically sympathetic to, but I also think the reality of it starts to break down. I think it's also kind of dystopian and sad. I think it's going to be interesting to see how legislation continues to evolve. I'll tell you that while I do not think the Bitcoin ETFs are the answer for a lot of things, I do think it symbolizes a growing acceptance of Bitcoin as a legitimate alternative asset class for the everyday retail investor. And so that encourages me. I think, we've all been beneficiaries. All of us who own Bitcoin natively have benefited from the run up that the demand shock by the ETF sponsors has caused. So I think that the fact that we have Bitcoin ETFs sponsored and that the inflows, over 12 billion between January and now, it's the biggest run up in ETFs in the history of ETFs. It shows there's a lot of demand, a lot of interest in at least exposure to the spot price of Bitcoin, even for people who don't want to go through all the headache of actually having a Bitcoin. It's no substitute by any stretch, but it's a nice affirmation of this as a store of value. And so I'm encouraged by that. I do think we should be mindful of the ETFs as possibly being a bit of a Trojan horse, that perhaps the ETF sponsors, as they gobble up more and more and more Bitcoin, it discourages other people from doing the learning of what Bitcoin is, how the key material works, and actually, rather than owning the gold, they want to own a paper claim on somebody else's gold. That's what the ETFs are for Bitcoin. You don't want to own the Bitcoin, but you want to have exposure to it. I think to a certain degree, the ETFs dumb down the access points to Bitcoin. I think people who understand Bitcoin, we've seen value grow in dollar denominated terms. But yeah, I don't really know how to think about it. I hope that there are intelligent people at the Treasury and elsewhere in the U.S. to say, rather than sell the Silk Road coins or whatever coins they're sitting on, we'll sit on those in Treasury. Just like we've got gold at Fort Knox, we ought to have Bitcoin, as part of the strategic economic reserves of the United States. I hope that there are people who are doing that. So that's kind of not much of an answer, I guess, but it's just a really hard question to answer. I mean, I don't think we're going to go so far as like what FDR did to outlaw the private ownership of gold. I don't see that happening. Because that was a completely different time. But I mean, I could say there's probably a non-zero chance. The other reality too is that for clients that we are privileged enough to work with, a lot of the custodial relationships we have forged are global relationships. So that's part of what we're helping clients plan for is the regulatory risk within the United States, because it could very well be that you've got a non-U.S. structure, whether it's a trust in the Cook Islands or a foundation company in Switzerland or someplace like that, and then that entity will have a Bitcoin custodial vault with a qualified bank in Switzerland, in Liechtenstein, or in some other foreign country. And so now while you still own the asset from a tax perspective, it might be in your estate, it might be out of your estate, but it's still kind of your asset, but it's not even inside the United States anymore. You've moved those assets beyond the reach of regulators through these enforceable legal structures. I think for a lot of the clients that we get to see, having something like that where they put a sleeve of their Bitcoin offshore to get it away from the reach of U.S. regulators becomes an attractive solution.
Do you ever think, more back to the ETFs, do you ever think that the timing of the ETFs, like we're actually like, do you ever think about that in general of like, in 2013, the Winklevoss twins, whatever, submitted their first ETF application. Like it's almost to some extent, if it was approved back then, a lot of the coins probably would have ended up in the ETFs and that bull market would have been quite crazy. And then, we just got them approved in 2024. And now it's like enough Bitcoin has been distributed that, the ETFs have still only garnered like a small fraction of the total circulating supply. Like, do you think about that at all, or do you have a perspective?
I mean, it's a super interesting point. I think, the Winklevoss brothers, definitely ahead of their time in a lot of things when it comes to this stuff. I mean, the Bitcoin world just wasn't ready for it, nor was the financial world. I was frankly surprised when BlackRock filed for their ETF. To my mind, that put the writing on the wall. But you're right. I mean, I think that is kind of the countervailing argument to me, thinking that this might be a Trojan horse, because to your point, HODL rates are at all-time highs. When the ETFs got approved in January, HODL rates have been at all-time highs. We've got, you'll know the number far better than I do, but it's like 19 million plus of the Bitcoins have been mined by this point. And so it's out there, and it will take a lot, I think, for the ETF sponsors to be able to actually ultimately wrest the control of Bitcoin from the hodlers, because hodlers are, they hodl. And so it's like they kind of become the seller of last resort.
In this frontier moment, Matt is suggesting that it will take a lot for the ETFs to take control of a majority of the circulating Bitcoin. This seems very logical to me. If you look at a chart of the hodl waves, a large majority of Bitcoin doesn't even move despite the extreme price volatility and endless day-to-day news stories. Another thing to consider is how much Bitcoin has already been released into circulation by miners. When the ETFs were first submitted for approval back in 2013, 50% of the entire supply had yet to be mined. Today, only about 6% of the total supply remains left to be mined. This means that in order for the ETFs to obtain a massive stash of Bitcoin, they need to bid Bitcoins out of the hands of all of the existing holders, which might be difficult. And now back to Matt.
So is this a way maybe for financially regulated entities like BlackRock, VanEck, Franklin Templeton, all these other sponsors to ultimately gobble up all of the Bitcoin supply? I mean, I think that's possible. I think it's unlikely. And I think in the meantime, Bitcoin just continues its upward trajectory along a choppy path. But yeah, I think the timing is the fact that it came in probably 10 years after the Winklevi filed their application. You're probably right. It probably created a greater stability for Bitcoin overall. Because I think if they had succeeded back in whatever it was, 2013, 2014, whenever they filed, it could have been that, hey, everybody wants to buy this stuff, and then now all of the circulating supply ends up in the hands of these ETFs, and then Unchained doesn't exist. I never have a family office for Bitcoiners, and and we're just finding something else to do.
Yeah, honestly, probably. Or I wouldn't count it out for sure. When you think about the total addressable market for Bitcoin and what Bitcoin could eventually become, a lot of people say Bitcoin is digital gold, which I agree with to some extent. It's if Bitcoin became the digital equivalent of gold, it would be $15 trillion asset, maybe $750,000 per coin. Is there any risk that Bitcoin ends up tapping out at something like that, or could it go a lot further? How do you think about what Bitcoin could eventually?
I mean, it's an impossible question, I think, to answer. I know Michael Saylor's got far more bullish answers than I do. I think trying to say that Bitcoin is this or is that is just too limiting. I mean, it is digital gold, but it's a lot more than digital gold. It's a technology layer that facilitates global transactions among parties who will never even meet virtually face to face, let alone it was a peer-to-peer cashless. It was a peer-to-peer electronic cash system, and it's a technology. It's a mode. And so, to have a Bitcoin token, or even just, elements of a Bitcoin token and some type of stack of sats that you got somewhere, you actually can now own a piece of this network layer. So yes, it does, those pieces do operate like this long-term store of value, and we can exchange those pieces for value as a medium of exchange. But it represents so much more. Gold, physical gold sitting in a vault somewhere represents past work that some miner went through. Somebody dug it out of the ground, they ground it up, they refined it, and they pressed it into some type of shape. And that's it. I mean, that's all it can do. And you might have this minuscule elemental value in technology for, gold in some capacity, like coating on connectors or whatever, but that doesn't really matter. It's the block of gold represents somebody's prior work. It is their proof of work in that respect. However, Bitcoin itself is much more than that. I mean, to own Bitcoin is to have an ownership stake in the broader network as it grows. And it's, again, I don't track the technology as much as a lot of other people do, but the stuff that's happening now on secondary layers within Bitcoin, and what the Bitcoin core developers continue to do to now start to apply different ways to use the Bitcoin chain to allow it to scale to a greater transaction level. as far as the spot price in US dollar denominated terms, I think it's impossible to know. I mean, I think to a certain degree, Michael Saylor is right. It goes up forever in some respects. And I think it's part of how, as the system grows and becomes more interesting, it can do more things. It naturally increases in value. But at the same time, you have the US dollar that is decreasing in value at the rate of 2 to 8% per year. And so, we have these kind of counterpoints. We have Bitcoin going this way while the dollar is going that way, and it just means the delta spreads that much more. And I don't think that stops, and frankly, unless and until the U.S. starts to stack some sats and actually makes a strategic economic reserve of Bitcoin, frankly. But again, like I said, I mean, there's probably a non-zero chance that there are smarter people than me sitting in Washington that are making those decisions.
Yeah, I'm sure that's probably or potentially happening. Hopefully it will happen at some point. Maybe last question, then we can go ahead and start wrapping it up. Looking back from, maybe 2016 before you started what you're doing right now or early 2017, would you be surprised at like the number of early Bitcoin adopters that just are sitting on massive amounts of wealth that, you just had no idea that this even existed in the world?
Yeah, for sure. I mean, it's like this whole other world for sure. And that's part of the joy of the Bitcoin rabbit hole. But I mean, I know that there are still people out there that have thousands of Bitcoins, in the United States. I mean, these are U.S. citizens. These are U.S. people. They've got all the problems that U.S. taxpayers have. They've got all the practical considerations that family people have. What is this wealth going to mean to my kids? What's it going to mean to my spouse or my partner? What is this wealth going to mean to my church or my synagogue as an expression of who I am? And they've sadly either have the misconception that nobody cares and nobody knows how to deal with this, or they have the misconception that nobody's ever going to find out, and I'm just going to sneakily be able to hand my key material off to somebody else. And I think that that's just naive. I think we've seen when Mircea Popescu died, drowned off the coast of Costa Rica several years ago. He was, at least allegedly, by reputation, one of the few Bitcoin millionaires who had over 1 million Bitcoins. We have no idea what kind of succession protocol he had, if any, around his Bitcoins. But it doesn't take 1 million. I mean, you can have, 100, you can have 1,000, 10,000, whatever. I mean, this becomes transformative wealth. And I believe that if we are long Bitcoin, I mean, if we really are bullish on Bitcoin, we believe that it is this store of value and it's this revolutionary asset that becomes the most important thing we own. To my mind, it just cries out for being strategically planned for. This is the most important thing we can do. So yeah, I was stunned that there was anybody who had 150 million bucks worth of Bitcoin back in 2017. Floored. But since that time, I've met people who have a hell of a lot more than that. And we're fortunate that we get to work with a few of those people. And it's, I don't just work with Bitcoiners, but no joke, and I'm being completely candid about this. The Bitcoiners are the ones that are the most interesting, because there's an ethos, there's a worldview that a lot of Bitcoiners have, especially if you've been in it for, more than a hot minute. If you've been in it for a cycle or two and you've developed the diamond hands to kind of hold through the drawdowns, like the three arrows collapses and the Terra Luna collapses and the SBF, the FTX collapses and all that kind of nonsense. And if you're still here after all that stuff, you have a mature worldview. And those are the people that I find the most interesting, is people who have been in it long enough, they're ideological about it, and now they say, this wealth has transformed my life and it can transform my family for generations. How do we structure around that? And that's what we get to do.
Yeah, I mean, that is absolutely fascinating to me. Very cool. Matt, thanks so much for coming on. I really enjoyed this. Where can the audience go to learn more about you and what you do?
Probably the best place would be on our website, Bespoke Group. The website is just www.bespokegroup. So it's BESPOKE group, GROUP.io. That's our website for the family office. I'm also somewhat intermittently active on Twitter, just at my handle. It is McClintock, MCCLINTOCK_M. And then I'm also on LinkedIn. You can just find me under my name, Matt McClintock, on LinkedIn. because I'm old and I, run a company. And so I'm on LinkedIn. But yeah, that's probably the best way to reach me. And you can always reach me through my friends at Unchained as well. I've been fortunate to work with Unchained for years. Unchained is one of the first companies I ran into in this space. I love what you guys do. I love the way you see the world. And I've been fortunate enough to work with a lot of people from Unchained, both, past and present. So thanks, Joe, for the opportunity to be on your program and to kind of share your platform with me. I believe in what we do. And I believe that we are kind of bringing sophisticated wealth management to Bitcoiners with a hardcore Bitcoin ethos. We get it. There's a lot of tension in how this works, but we're patient. We've got a low time preference too, and so we just work with people long term to figure this stuff out.
Awesome. Yeah, love it. Thanks again, Matt. This was great.
Thanks, Joe.